What's up, everyone? Hope you're doing great. Welcome back to the show. My guest today is Thibaud Marechal, also known as Thib. And I came across Thib on Twitter, was just really enjoying his output, his commentary, everything he was saying about Bitcoin, of course. And looked into him a little bit, went to his blog, enjoyed his writing, saw that he worked at Knox Custody, a custodial service in Canada, and just thought it would be fun to sit down and have a chat with him. I caught him right as he was returning home from the Lightning conference somewhere in Europe. I can't remember now exactly where it was. I think it was in Europe. But, I think he just walked in the door, and then like a half an hour later, we did this conversation. So I have to thank him for keeping the schedule and sticking to our appointed time. I'm sure he could have easily canceled. But anyways, this podcast, I'm going to try it a little bit different. So the entire recording is going to be on this episode. So the open conversation and the rapid fire questions. And that's just due to feedback I've gotten from a number of people on Twitter that, kind of want the whole thing to be in one place. But for those who just want the rapid fire questions, I'm going to keep publishing those as a separate entity, just for efficiency and convenience and all that. I forgot to press record on this conversation, so the first couple of minutes are gone and we pick it up somewhere a few minutes in. Anyways, that's it. Hope you enjoy.
Let's do it.
Same values and the same excitement about the space and Lightning in general. It's pretty cool.
Yeah, I talk about it a lot with a lot of the people that come on the podcast, and especially in the context of people that have managed to change their careers. So not just, be engaging in this stuff as a hobby, but actually, whether it's in media or working with a company in the space or anything really, and the kind of like energy that becomes available to them when they really align with something that they actually give a fuck about and that they are interested in.
Yeah, it really is the power of economic incentives, also like skin in the game. Like for me, it was a big move as well. Like personally, I was like, okay, am I burning my career, quote unquote? It's like we tend to sort of overthink these things, and I was really not sure whether or not I wanted to move full time to, at the time, I am guilty. It was crypto, right? And the whole shitcoinery thing, and then you basically get educated, do your homework, and realize that there's a lot of noise, and that actually there's only one thing that truly matters is just Bitcoin, and that this technology is anyway going to evolve in layers, the way TCP/IP and other public computer network protocols were deployed on the internet. But yeah, it's a big move for people, and my family was like, yeah, why the fuck are you doing this? I mean, you have a cool thing with a venture firm, and like this is all great. Like, why are you going in this weird crypto industry? But best move in my entire life, for sure.
Yeah. I mean, it's pretty unanimous, especially when the move is into Bitcoin. A lot of people change their careers during 2017, and those career moves may have not been the wisest, but people that moved into like actually Bitcoin projects, I've, never heard anybody tell me that they regret like doing that, just for personal satisfaction, for the people that you get to interact with, obviously for the meaning of the cause that you're working towards, the financial rewards, everything.
Yeah, no, definitely. Though when you enter in 2017, you're entering at the top of the bull market. And so psychologically, it's sort of hard because then you get a big sort of withdrawal in terms of hype, and in terms of, which is really good to build, to be focused and to remove like all the scammers and the crypto shitcoinery. But I had a few friends who decided to basically, because I think they didn't have skin in the game, and they didn't do enough their homework in terms of like realizing what that thing really was about, and they decided to just leave and go back to fiat jobs, right? First story, by the way. When did you get involved in the space?
I was trying to figure. I mean, I've said it before on the podcast, but basically, I was familiar with Bitcoin when it was under $1. I'm not sure if that was due to Silk Road, if it was even before that somehow. But I just remember the hoopla around like it reaching parity with the US dollar. and everyone was like super excited, like, oh my god, I can't believe it, it's $1. And I was really interested in it from a political point of view. I didn't like, and I was a gold bug and silver bug, and like had been very interested in investing for my whole life, right, since I was a teenager. And I was so enthralled by the political case for it that I wasn't looking at it as an investment. So I would see it go up like 10x, and I would just be like, yes, this thing might be real. But the investment opportunity just wasn't clicking, to my everlasting regret. But, and then in 2000, I was trying to figure out, I was trying to search. I changed my Twitter handle like a year ago or something, and I was trying to search my earliest tweets. And for some reason, I don't think I can go back all the way. I don't know if that's because I changed the handle or what. But because I was trying to see like when was my first tweet about Bitcoin. And the only evidence I could find was back in the day, in 2014, Twitter used to send you an email when someone retweeted you, if you can imagine that. And so I searched my email, and in April 2014, I tweeted an Andreas Antonopoulos video to Joe Rogan, and he retweeted it. And so that's the first evidence I have of my like Bitcoin Twitter sort of stuff. And then, I started getting more involved in 2014, picked up my first tiny little bit just to play with. And then I started interviewing people really sporadically in 2015. Just like whenever I would meet someone that knew anything about it, I'd be like, sweet, let's do an interview. Just because I was so fascinated by it. And then, as the story goes, somehow this year I've never been super active on Twitter. I would just use it as kind of my newspaper. But somehow by just slowly following enough people, this year I entered Bitcoin Twitter. Like I realized it was a thing, like, when you follow enough people that something becomes like an entity. So that's what happened with me this year with Bitcoin Twitter. Sorry?
Yeah, it's a Schelling point.
Yeah.
Everybody converges towards that sort of echo chamber.
Yeah, and when I found it, I was like, holy shit, these are my people. This is incredible. Like, I thought I was alone out here in the wild. So, and then once I knew there was all these people, I was like, all right, I got to do a more formal podcast because I've just been kind of fucking around with it for a number of years. So that's my story. What about you?
Very cool. So the first time I discovered Bitcoin was in 2012 on the Silk Road. I was in a class of macroeconomics, and we were searching for Adderall for midterms. Everything was priced in Bitcoin, but I really didn't care about it. So I forgot about it completely. And I saw it again in 2014 when I was in Argentina. On exchange, and at the time in Argentina there was capital controls, so all citizens were basically limited to $10,000 worth of exports of their currencies. And so at my school, UTDT, which was the university, a lot of students were actually trading a bunch of things and Bitcoin. And so it sort of came back, but again, like didn't really care about it. And in 2016, I joined a VC firm called Real Ventures, and this firm started building a crypto thesis. So they were like, okay, there's all these like coins happening and all these great projects, and we want to be able to invest in this. So we brought in, an investment analyst, quote unquote. He was just a guy who did the pre-sale of Ethereum and got, extremely rich out of it. And because he was rich, some reason, like, it was a proxy for expertise, I assume, which is, a fallacy, but anyway. And so we started building that thesis and realized that there was no way for us to execute it because of the custodial challenge. Our CFO, it was like, we're looking at a $2 to $5 million investment thesis. But the CFO said, look, guys, there's no way I'm going to hold, that much worth of assets on a hardware wallet that is a single sig, like in my, bedroom or whatever.
Right.
looking around at companies who could help solve that, and that's how I met Knox, the company that I work at now. We tried to invest it from the firm that I was working at, but it didn't work as their round was oversubscribed. But through other channels, I successfully sort of like joined the team and as their first sort of non-technical employee. So it was a really technical, engineer-heavy team and focused on building a custody product for institutions.
Right. Yeah, I had a look at the website a little while back because custody is, one of these challenging areas of the space, and a lot of people have different views on it. But one of the things that I was, because I interviewed the guys at Leaden last week, and
Yeah.
on their site they say that their custodian is BitGo, and then you go to BitGo and it's they this $100 million insurance is touted on the site, right? And then I actually had read something on Knox, maybe it was your blog, and it was basically saying that sure, your level of insurance is one thing. How much do you have in custodial assets? That's another consideration. And what's the disparity between the two? Because push comes to shove, does it mean you get 100% or 10% back of your your assets under custody? And
And it's a big issue, yeah, of insurance. Yeah, sorry, go ahead. I
no,
want to
no,
cut you off.
you go.
That's the big issue with insurance. It's like it's been used today as a more of as a marketing tool rather than a risk transfer instrument. Like an insurance policy, if properly designed and adequately sort of allocated in terms of capacity, it will transfer the risk off your books as a custodian onto insurance markets, right? And insurance markets, they will decide to allocate capital to your book, to your policy, if it is properly designed. And so the issue today is that a lot of custodians, they sort of keep insurance very blurry and don't really explain, like don't educate the marketplace in terms of what the risks that are covered are. And so for instance, the most common risk that is insured today is vault risk. And vault risk is literally you have shards of private keys in a physical vault. Think of it as like, an actual vault that we know in banks. And this policy covers a physical intrusion in the vault. And if someone breaks into that vault and grabs the material, the keys or the shards, and they can successfully trigger an on-chain movement, that is covered. But that's it. And so if you really look at the full like private key lifecycle, private key management lifecycle, from the generation when you start, using physical entropy to generating the seed, to archiving the seed, to constructing a multi-signature scheme, and then to actually processing transaction by using those keys to sign in a sequential order, like all these different steps involve extreme risks at a bunch of different levels, right? Whether it's hardware, operational, whether you're connecting it to the internet at some point or not. And so insurance policies today, they're really not that granular. And it's not to shit talk on anybody, but it's like today it's really, companies get insurance because of their brand equity, their name, or because they have a good balance sheet. So at Knox, we're like, well, we don't have a brand, nobody knows us, and we don't have a balance sheet because yeah, we raised a little bit of money, but we're not a Fidelity or BNY Mellon or State Street with like trillions of dollars of assets. So how do we do it? We're like, okay, well, let's make sure that we make the design of custody insurable at the molecular level. That everything that we've done is sort of, we measure the risk involved and we basically try to price the likeliness of a risk event, of a loss event happening at one point in the private key management lifecycle, how severe that loss could be, and then sort of get a sense of like the sort of normalized probabilistic distribution of that risk happening. And if you take that, you can build a model that is then sort of interesting for insurance markets to start actually understanding how to properly price this risk and then allocate capital to it and build insurance towers.
Right. It makes me wonder though, because this has got to be new to a lot of the insurance companies, right? Not only the asset class, but the scheme that you just mentioned and the approach of not looking at assets or brand name and looking at the kind of structure of the scheme. So like which insurance companies are involved in this space? Like are you able to disclose that?
Yeah, so there are two main brokers that are active in the space, Aon and Marsh. And so we're working with Marsh for our policy. And so those brokers basically, so we have a proprietary insurance program that we've designed with them, and Marsh then goes to market and go and talk to insurance providers. And so then insurance markets, they're split in like different sets of risks. So you're gonna have like the specie market that is more focused on like physical risks, so like the volt risk that we described. You're gonna have more like cybersecurity risk. You're gonna have E&O risk, like a bunch of like different sets of risks. And so for each of these categories of risk, you have different providers, and then you sort of build. Literally, it's a tower where different insurance providers are gonna take different tranches of risk in terms of the amount that they cover, the amount of loss that they cover. So let's say you want to build a 100 million tower. Well, the first insurance provider A is going to take from $0 to $10 million hit, and they're going to price it at a particular premium target, and that sort of gets built over and over again until you fully maximize the capacity of that tower.
Right.
And the most active syndicate is Lloyd's of London. That they sort of like allocate capital to a lot of these policies in the market so far, but we're seeing sort of like expansion in other markets as well.
So on the Knox website, it says insured up to 100%. So when I read that, I'm like, well, what does that tell me? It tells me nothing. It could be 0, it could be 100. So what is the determinant what determines the level of insurance that you would receive on the assets that you have custodied with Knox or any other given custodian?
Yeah, the intent of that is, of course, being compliant with the requirements from insurance markets. Like, again, going back to this notion that insurance so far has been used as a marketing tool, I would say some insurance markets, they've been misled in those policies. And so customers that are, interacting with those counterparties that claim to have broad insurance policies are being misled as well. And so we're trying to change that and sort of have more of a conservative approach and try to educate the marketplace and explain like what it is that we're looking at, how Knox is insured, because we are insured. We're not providing insurance to our clients, right? It's like as a counterparty, like we do a bunch of different things internally to manage Bitcoins of our clients. And if there's a loss or a theft, then we get coverage. In terms of the up to, it is basically any customer account that gets opened at Knox has the ability to deploy a bespoke insurance capacity for their account. So meaning if you want to get 60% coverage for your Bitcoins and you're depositing 10 million Bitcoins, great, we can do that. If you want to get 100%, great, we can do it as well. And so based on that, we sort of, the premiums are priced differently, and sort of the cost basis and the model for that will be different. So that is sort of like the first part of the answer for the up to. And then the second is for any insurance policy, there's a list of exclusions. And so exclusions are very specific conditions that if your claim event falls under one of these, you may not be able to get the full claim to be valid. And so that is also a reason why insurance markets, sort of, you need to include an up to notion when you have insurance, because you're never going to get 100% insurance all the time. Like this is where it becomes marketing and not that honest.
Yeah. So what would be the example of a case where, you just mentioned like some events would not be insured, right? Some would, some wouldn't. What would be some that that wouldn't? You know, let's say somebody has, and like I'm not. This is purely my own curiosity about how custody works, you know, and how insurance works, because I really don't know much about it. But you know, what would be like an event that would occur where there would be loss of funds but it wouldn't be covered?
So usually, and again, like if I take a step back before answering that question directly, it's like the the assumption we're making at Knox is, you know, everybody, Bitcoin is a bearer asset. Everybody should be holding their own keys and running their own full nodes for verification, right? But fiduciaries, you know, that are managing other people's assets and that are, you know, executing and safekeeping on their behalf, they need to deal with independent third parties. And so our assumption here is that if you're doing custody, you need to have the proper set of risk transfer instruments to be, you know, to follow the Bitcoin ethos in a way and be a trust minimized third party. And so in terms of exclusions, usually collusion, for instance, is a risk that is not very much covered, or if it is covered, it is extremely expensive to cover in terms of premium you're going to pay. And so this is a major accomplishment that we've done internally, is sort of the way we've architected our systems allows us to be collusion resistant up to a certain number of internal staff. And so that threshold basically gives you enough assurances to get a system to be able to insure against the risk for that system, because it's highly unlikely that a collusion event would actually happen.
Collusion between customer and someone inside, or employees inside, or
internal employees. So let's say, you know, we're holding billions of dollars worth of Bitcoins, and you've seen it in the past. Like there, you know, a lot of the most material loss events in the space related to exchanges, for instance, there's always a story around, okay, like, is that collusion? Because you're seeing on-chain movements post asset loss. How is that possible? If you lost the keys, the assets shouldn't be able to move on-chain, right? And so we've seen, you know, that case for you know, a recent example in Canada. There's been, you know, speculative opinions made around Mongox in the past, and a bunch of other counterparties that just like exit scam on their customers.
Yeah, let's stop here for a second, because you're in Canada and maybe you have more insight, but like the whole Quadriga thing is sketchy as fuck. What's your opinion about that?
It's fuck, man. Like, again, it's a speculative opinion, but the guy, you know, supposedly died in India, and like they brought his death certificate back to Canada. I mean, currently there's another sort of avenue of opinions that's been explored, which assumes that this guy is sort of a known. He used a fake identity as an administrator of the Quadriga CX corporate entity, and basically has used that identity to defraud people of their money and just scam his customers. Because, you know, again, from internal governance, him being the sole owner and manager of private keys of a $200 million treasury, it doesn't make much sense, especially if, again, these companies, because they manage fiat in Canada, they're regulated, and the supervising agencies in those jurisdictions that sort of have oversight on these businesses, they do audits, and they do, you know, they have a certain set of internal controls they have to respect, and so on and so forth. Like, we do have to respect that, and we don't even touch fiat. We're just Bitcoin, right?
So are people aware of which coins are like the Quadriga coins, and if and when they move, will we be able to tell, or is it obfuscated somehow?
I haven't looked into this recently, but now with the emergence of coin joins and large scale mixing services, it's becoming more and more tough, like for forensic companies to just like follow, like traceability is just eroding, which is good in a way. It's desirable. You want fungibility for Bitcoin, not necessarily on the base layer like built in,
Yeah.
but those sort of like layers of coin joins are extremely interesting. So
Yeah.
then, yeah, you get privacy while you lose on traceability.
And he went to an area of India where it's like known for faking death certificates and stuff like that, right? I mean, I when I looked into the story and then I googled the dude, and I know this sounds horrible, but I saw his picture and I was like, that fucking dude definitely faked his death. Look at his smug ass face.
Yeah, for sure.
But no,
But that's the thing. There's still a lot of scammers in this space.
yeah, well, that's kind of what I was going to get at. Like, this is the philosophical divide, right? The not your keys, not your coins. And like, I get it that if this is going to, like, the idealist side of myself is like, this represents an opportunity to be fully financially sovereign, and it comes with responsibility to learn how to take that sovereignty, right? I.e., how to manage, generate keys, manage keys, be your own bank, all that kind of stuff. On the flip side, it's like that's more than just like a technical hurdle. That's a worldview hurdle, and so a lot of people are going to want to not adopt that worldview, but they're still going to want to benefit from it being able to invest in the asset or whatever. There's going to be cases where like custodians are in demand, and so like I don't know if it's a transitionary phase where that's in demand until sometime in the future when people become more comfortable with like being their own custodians, or from an institutional perspective is if it's just always going to be the case. But like, these particularly exchange hacks is the major one. But it's just they continue to happen, and they're always just an example of the terrifying realization that you have no recourse, right? Like if someone has your
There's no
keys, they
yeah.
own those coins.
Exactly. It's like exchanges are similar to banks that we know today, but without the FDIC insurance, without sometimes adequate customer support. And so, yeah, it's a huge counterparty risk for people that are trading on those venues. And if you look at an exchange, like an exchange is just supposed to match orders in a book, right? And keep a flow that provides sufficient liquidity for good trade execution. They should not have to manage bearer assets and build internal infrastructure for cold storage and have people internally manage that and face the risk of colluding again because they're holding a lot of liquidity. I think if it's a centrally controlled like exchange as opposed to sort of like these decentralized exchanges that you keep on hearing about that are still, I think, very far away, then definitely it makes sense to segregate duties between the trade and the order matching and the custody. So that's where I truly believe there's going to be in the future, even perhaps regulators sort of regulating out companies that do not comply to this need of segregation. Unless you have proper risk transfer instruments and you really get good coverage for your customers, regulators are going to want to enforce consumer protection and all that. And I know, again, it's out of the Bitcoin ethos to have regulation, and I think Bitcoin doesn't need regulation anyway. But if you don't want to have regulation, then you have to be in control of your keys. Like when there's an introduction of a counterparty risk, I think this is where regulation is going to be drastic in the future.
Sure. Well, if you introduce counterparty risk, I mean, anything that reduces that risk is your friend, right? So ideal scenario is you manage it yourself and you're the only one responsible. But the second that you introduce a third party, then you probably want regulation because it's the only thing that has any chance of saving your ass or allowing you to protect yourself in any way.
Yeah, though I should add this little nuance. Government issued regulatory frameworks are, for the moment, good enough proxies for security, but they don't necessarily encapsulate all the concerns and all the sort of risk vectors that matter for custodians or any other custodial services to sort of mitigate their risk. Like, for instance, a very concrete example, there's more and more demand of SOC 2 Type 2 reporting for custodians, which is essentially it's an audit, and as a counterparty that has that ability to issue SOC 2 Type 2 reports, basically you got to prove that you have a certain sets of internal controls and that you're sort of operating against those controls over an extensive period of time. And that is it's a good proxy for security, but it is far from encapsulating like all the risk concerns that there are related to the custody of private keys, right? And so this is where security audits are more relevant, or open sourcing your software stack or a particular component of it so that you can get the community to provide feedback. I think that's a much more sound approach than just using, sort of like proxies that are already baked from previous legacy frameworks that don't necessarily understand the nuances of the risk today.
Yeah, and kind of related to this, and just like I'm Canadian as well, so I'm always curious when I speak with Canadian Bitcoiners, like what the scene is like in Canada, right? So obviously it's I get the sense it's not as robust as in other places, but what is the Bitcoin scene like in Canada these days, or at least you're in Montreal, right?
Yeah. Montreal, I would say, is divided. Montreal is the toxic Bitcoiner community, and Montreal has that, and I'm saying toxic, like I'm a 100% maximalist or whatever label you wanna put there. But Montreal, interestingly, has a really deep cypherpunk history, because Blockstream was started in Montreal, right, in 2014 by Adam Back and Austin Hill and a bunch of other very smart people.
I didn't know it was started in Montreal.
Yeah, it was started in Montreal, and then it moved to SF, and now I think it's sort of all over. But before that, a company, I think it was in the 90s, called Zero Knowledge, was a company building encryption and cryptography tools for the internet. That was also launched by Adam Back and Austin Hill. And it was sort of an interesting jurisdictional arbitrage for that company, because at the time the US had banned the exportation of encryption. So it was extremely hard to sort of build a company in the US and sell the products we're building to the world, because you could not export encryption, right? It was treated as a weapon, and basically, that the rules at the time prevented the exports of that. And there's a cool story also in terms of like how they actually broke that rule. They basically printed a bunch of public keys on a T-shirt, and the dude put the T-shirt on and just like crossed the border and traveled, and they made the case in court as this is encryption that was code that was printed on a T-shirt, and code being speech, encryption being code, therefore encryption is protected by the freedom of speech, and therefore they got that restriction of encryption export ban, or seized, I would say.
Awesome.
So Montreal is a good history for that. Toronto is Ethereum with Waterloo. Vitalik Buterin and the whole Ethereum gang is out of it was started in Waterloo. So Toronto, and we joke about this, Montreal Bitcoiners, but Toronto is the capital of shitcoins. So last week, Rodolfo from CoinKite made sort of organized the I think one of the first like toxic, again, maximalist meetup for Bitcoiners in Toronto. So it's great to see the antidote spreading.
It's hard for me to believe that because I saw that too, and I was like, really? That's the first in a city like Toronto, like a big international city. That's the first meetup for something like that. Like it's the first hardcore Bitcoiner meetup.
Yeah, yeah, it's
It
very
makes you
interesting.
realize how early everything is, right? Like, because when you're deep into Bitcoin Twitter, you just assume that everybody in the world is basically a Bitcoin maximalist, right? But then you come out into the real world and you're like, oh no, this is mostly just on Twitter at the moment.
Twitter, man, is such a small echo chamber when you think about it.
I know, but
It's
it seems so. I mean, it's great. I'm sure we both love it, but
like Bitcoin experience would be well, our Bitcoin experiences would be so different without Twitter. I would feel so lonely. Yeah, yeah.
yeah, me too. Um, Tell me a bit about how the Lightning Conference was. I'm curious to know. Like, this was the first one, right?
It was the first one, yeah, yeah. And personally, it was my first Bitcoin conference. It was great, man. The What I really enjoyed was because I've done a bunch of other crypto conferences, and often it's pretty focused on hyping the stuff and marketing and thinking like really big visions that are a bit blurry and all that. And and this time around at the Lightning Network conference, it was really about education and about really intellectual, honest discourse around Lightning being a very alpha software that has a lot of potential if executed well, but still has a lot of uncertainty and unknown unknowns. And so, yeah, from that angle, I thought it was extremely exciting, uh, but also refreshing in terms of like it's still conservative. Like people are not overhyping the stuff. And then it's just the energy of meeting all these Bitcoiners that you talk with on a daily basis on Twitter,
Yeah.
and meeting them in meet space, away from the keyboard is it's pretty cool.
Yeah, I look forward to my first conference someday, but I imagine it's going to be one of those scenarios where you see someone and you recognize who it is you've talked on Twitter or maybe on a podcast. You're just like, dude, come here, give me a hug, man. Or like, like, cause it's your people, right? And it's great to see your people in real life.
Yeah, yeah, yeah.
One of the things that's funny about, you said like it's conservative, and that's one of the things I love about Bitcoin conferences. Like people are grounded and it's conservative and it's talking about the real issues. And then I think someone the other day or yesterday like showed two videos or two pictures. One was DevCon, one was I think the Lightning Conference or something. And the Lightning Conference was like, a bunch of people, a speaker, some cool, like I think the drink machine or something like that. And then DevCon with all the lights and the drumming and the colors and everything.
Yeah.
Two different worlds.
So what I love about Lightning, if I would add something, is that it is attracting a different community. I find that Bitcoiners, because like pushing code to the Bitcoin Core implementation is extremely rough. I'm not a developer, right? But sort of like I've read a bunch of that, and I've heard other people talking about it, and it the nature of the software project, A, it's extremely complex, but B, because it's a base layer that has incredible assurances that you absolutely cannot make trade-offs on. It makes the sort of deployment of new features like again extremely conservative by nature. And so Lightning, it looks like it is because it's a bit more malleable, it's a bit more flexible, and there are more implementations already. You're seeing a much more like a much more iterative, much more open community in terms of like all the stuff that is being built. Like for instance, you're looking at there's a lot of hardware projects, right, DIY stuff that is around Lightning with little games and arcade games like the beer machine, the cocktail machine. All of that stuff is awesome, and I don't feel it was there before with Bitcoin. Maybe it was, but I just wasn't at those conferences. But I think that is also a really cool element.
Yeah, I totally agree with that. I went to your blog a couple days ago and read some of your writing, and one of the ones that I really enjoy the analogy or the comparison, and not even comparison. I mean, it's part of it, but when it's compared to internet protocols, and so the Bitcoin protocol is kind of, positioned as the next layer on top of all the existing protocols. I think that one, when we talk about how to position Bitcoin when you're speaking to people that don't know much about it or that are curious or that are skeptical or whatever, I think that's one of the ones that's actually that tends to make sense if people can just get a kind of a base understanding of how those things work. So could you kind of summarize like that case for me? Because you wrote a big blog post about it, but if you could summarize it, I'd be interested to hear it.
Definitely. It's funny you're mentioning this because the reason why I decided to write this one was to have a narrative that was focused a bit more on technology, because I realized that my friends who were not into Bitcoin, when I was talking about Bitcoin and making the case for Bitcoin, I was always using the monetary angle. And the monetary angle is a deep rabbit hole.
Yeah.
And if you don't have the proper understanding or sufficient time to sort of expose the context, make the case for the monetary phenomenon that Bitcoin is, then it's hard to jump from that to actually like the Bitcoin protocol. But everybody uses the internet. Everybody understands, what HTTP is, because anytime you type in an URL, you're seeing it, right? And so yeah, this is where I got started pretty much. And so this article sort of makes a reference to the layered approach of Bitcoin development as a protocol, and that comes from Giacomo, who's been pushing this sort of new narrative in terms of like, well, there's the Bitcoin protocol BP, and there's the Lightning Network protocol LNP, and those two protocols are layered, and you're going to see other layers being built on top of it, the same way we have TCP that sits on top IP and that essentially manages how data packets flow on the internet. And then you have HTTP that's built on top of this, and I'm abstracting away a whole bunch of other public protocols that allows for accessing IP addresses for users in the client server model of the internet. And so Bitcoin does the exact same layered approach, but instead of using a client server model, it uses a peer-to-peer model. And instead of being information, it is value with intrinsic financial value in that code, which we give it the name of bearer asset.
That's the tricky part, right? So I feel like when talking to people, if you use that particular angle, they're like, okay, I'm with you, like a new protocol on top of existing protocols. And it's like, wait. When you say it's instead of transferring information, it's transferring value, how? Where's the value coming from? And that's where you kind of got to get into the rabbit hole of money part, right?
You got to get in the rabbit hole of scarcity.
Right.
It's like, well, that thing is Bitcoin has a hard cap, and that hard cap is enforced by a software program that is voluntarily run by a bunch of computers as part of that network. And you can't change the rules. The rules are, if you want to join the network, you got to accept the terms and conditions of Bitcoin, which are there's a hard cap, there's a very predictable schedule of emission of the new units of Bitcoins. And so basically that very simple set of rules give you the assurances around the scarcity of the asset. And again, if you go back to sort of like things that are much more relatable to people, because again, if you start talking about gold and money, like for sure a lot of folks don't understand that, because I don't blame people who don't understand it, because the reality, like, it takes a lot of time to learn about this, and people are busy, they have jobs, they have families, they have friends and other occupations, and like, reading about Austrian economics and money on your Sundays, like, it's not the thing that everybody likes to do, let's be honest. But for instance, like when I was a kid, I was exchanging like Pokemons with friends. And the scarcest cards that were the toughest to get, well, they were the most valuable. So like scarcity has always had this concept of value. The scarcer it is, the harder it is to get something, the more when you acquire it, the more valuable it'll be for you. And again, we all know that value is a subjective perception. But if that scarcity is perceived by a market, and the market being the world, the internet today, well, all of a sudden you have a value that is extremely correlated to that scarcity. And this perception of value is just the spot price of Bitcoin, right? And so I think that is sort of a way to sort of make sense of why the scarcity of Bitcoin creates value. And then, yeah, you can go down the rabbit hole in terms of like why or how can a hard cap money work? Because again, we've, Keynesian economics and just traditional fractional reserve banking introduced the notion that actually for an economy to properly function, you have to have that sort of inflation target to force people to spend and to stimulate the economy, which is nonsensical when you really think about it. But these are notions of economics that need to be understood, right?
On that exact topic, I got into a long Twitter thread with some nice dude in I think he's in South Africa yesterday.
Yeah.
But we just went back and forth like 20 times about, Bitcoin as money, is it possible? And he was making the case for some not currently non-existent, but made possible by a protocol whereby the amount of money issued would be directly correlated by the amount of demand for money in the economy, and it would not be inflationary nor deflationary, and the issuance would not, and there would be no incentive structure in the protocol. And I was just, so obviously based on that, I was like, how would that even function? And that was kind of the nature of our back and forth. But yeah, I sometimes forget, I'm sure we all do when we're hardcore Bitcoiners, like it makes so much sense. And that's what like we get so excited about. But then when we try to explain it, we realize how many different like points we need to touch and cover for it to make sense to somebody who hasn't been like deeply into it. It's like you think like, hey, you could explain it in 2 seconds, but that's probably because one, you're always talking to Bitcoiners, and two, you're like, oh no, but if you don't get this point, then you're not going to get the point I'm making. So I got to make that point first. And then you're like, but shit, I got to make this point first. And then I got to make this point first. So that's why I really appreciate and talk about a lot here, the willingness and the importance of like all different types of people coming from different perspectives, trying to articulate what this thing is and try to explain it in different ways, because everyone responds differently to different forms of communication and different explanations. And I think like everyone should try to articulate this, and we just kind of see which articulation makes sense. And that's a really awesome thing that's happening now. Whereas like just a couple of years ago, people would try to explain Bitcoin broadly. And now we're seeing like people are trying to explain Bitcoin to children, that children's book that came out recently. And then people are trying to explain Bitcoin to, Jewish people, or people are trying to explain Bitcoin to moms and stuff. But yeah, there it is. So I think that's the way forward, really trying to meet people on their respective levels.
Absolutely. Yeah. As Bitcoiners if you want to sort of educate or have conversation with no coiners or pre-coiners, it requires a lot of empathy and being aware of the background that the person has, because Bitcoin is, for different people, is going to be different things. If you look, in China, for instance, Bitcoin is going to be a great hedge against capital controls because it's unseizable. Great. In Venezuela, Bitcoin is not necessarily unseizable, even though it is technically, but it's uninflatable, unprintable. It has less volatility than their national currency, right? In Hong Kong, well, it is, if you use it properly, it can be less traceable, uncensorable, in terms of, again, if you've been flashed by those those lasers in a demonstration, you can get your bank account frozen in Hong Kong today. Yeah. Well, with Bitcoin, like nobody can freeze your account. So again, I think these are extreme like painful setups that these people are facing, but they basically translate into Bitcoin value propositions. And so for millennials that can't afford real estate, that don't understand stock markets or bonds, and that are struggling with cash flow management, but are still like looking to save a little bit of money because they know that the pension system is not going to be the most reliable in the next 30, 40 years. And I consider myself like as part of that box. Well, Bitcoin is a great savings technology, right? Because it's not debasable.
Yeah.
And I know what I'm investing in because I can literally Google it, go and inspect the code, or if I don't have the skill set to inspect the code, I have a web of trust of people that I know are extremely smart, and they've actually done and basically did the due diligence in the code base.
Yeah.
And so we can understand much more with much more adequacy the sort of all the properties of Bitcoin as opposed to stock markets. Because again, like I used to be a customer of a robo advisor, Wealthsimple in Canada. It's pretty big. It's a great fintech, and like you basically give them whatever every month or a big lump sum of money, and they invest for you. But you have no idea in what they invest. You don't understand the strategy. You don't understand if the companies are doing interesting things or if they're going to be providing a return that is consistent instead of being extremely volatile. And so again, it's interesting how different narratives propagate to different segments of people for Bitcoin.
Yeah, exactly. And I think that I love that point, and I think it's so important because it really is different things to different people. It's so versatile that its value prop or the service it provides is so different across different people. For example, like, wouldn't you like to hear the blog post of the Kenyan farmer who values? Wouldn't you like to hear how they value Bitcoin? Or wouldn't you like
Absolutely.
to hear the Vietnamese digital entrepreneur what their value case is for Bitcoin, and have them explain that in a blog post or a book or something? Like I would love to see more and more of that where people just define it based on what it means to them versus what it might be more broadly on a macro level.
Yeah, and if I love that, if I can build on top of it, if you look at all the properties that Bitcoin have, so like the unconfiscability, unseizability, and unprintability, and all these things that we often talk about, I think overall, agnostic of anyone's background, Bitcoin is uh, is an economic force that celebrates individual sovereignty. It allows for entrepreneurs, it allows for people to just go out there, be sovereign, like monetarily sovereign, and take back control of their finance, which is everything. Like we've talked a lot about money being time, right? So if you have control over how you allocate that frozen time for productive investments in the future, whether you want to start a business, buy a house, or educate your children or whatever, um, that I believe will bring a completely new level of prosperity in the world because people gain back control and because people are much more aware of how to manage money and what money is, because it requires, if you want to be sovereign, sovereignty means freedom, sure, but it also means responsibility. And if you're truly responsible for your money, for your savings, well, you better educate yourself. You better invest in that. I think it's Trace Mirror that says that, in that sort of a human capital. If you don't have human capital that you've invested in, then you're kidding yourself. You can't be sovereign, right? And so I think we're going to see much more individuals. Like personally, I've experienced it, and I'm seeing a lot of different friends as well, like who changed with Bitcoin, because it's like if you don't learn and step up your game in terms of learning how money works, how private key management is properly done, how encrypted messages work on the internet to not leak privacy stuff related to your transactions and so on and so forth. you're going to get wrecked, right?
Yeah.
And there's no bailouts in Bitcoin. There's nobody you can go and knock on the door and say, hey, I fucked up. Can I get a second chance? Well, no, it's like you burnt if you burn those UTXOs, for instance, because you got hacked or you sent them to the wrong address or whatnot, then it's gone. And so that I think is yeah, it's just changing individuals.
I agree, and I think that's such a great thing, that we're moving towards this thing that's inspiring people to take more personal responsibility, because I think people generally, especially in today's society, kind of abhor personal responsibility because of what it implies. Because it implies that whatever happens, it's your fault. And the reason why people don't like that is because then they're going to have to judge themselves. If your bank loses your money, you get to judge your bank. You get to complain about your bank. You say they're a bunch of fucking idiots or they're a bunch of crooks or something. If you fuck up and it was all your fault, then you got to look at yourself and judge yourself. And I think, in society broadly today, we could generalize and say that people really try to avoid that as much as possible. And this movement towards taking more responsibility and all the accompanying things that implies, I think is a really, really healthy thing. And I think it will manifest in a lot of positive changes in people's lives and society more broadly, but it'll take time.
It'll take time because it's uncomfortable. You're stepping outside of your zone of comfort, and so it requires an explicit intent to get there, right? And for sure, yeah, it's easier to delegate the responsibility to other trusted third parties, whether it's food companies advertising you crap, or banks holding your money and investing for you. Or Netflix giving a sense to your life on Saturday nights. I think if you take back control, well, okay, you get more educated. It comes back to education. I've personally learned so much in so many different topics and fields related to nutrition. Like it's basically you realize that you can't trust much around you. That it's sort of Bitcoin is that orange pill that really open your eyes around you and make you realize that actually, yeah, you have to do your own research and validate for yourself. That concept of running your own full node to verify the integrity of the Bitcoin ledger to make sure that you have actually received payments. I think it's a truly exportable concept outside of Bitcoin. Verify everything, right? Verify the marketing you're getting around. Like, do you actually need to eat cereals in the morning? That type of verification, and the list goes on and on and on.
Yeah, I think it ultimately comes to a fundamental question which has persisted throughout probably all of recorded history, and that is, do people really want freedom when they know what's required to take it? And I think like everyone on the surface level will say, yeah, of course I want freedom. I want to be free. But what do the actions that people take reveal about how much freedom they actually want? And I think you could make a strong case that in today's world, when people are given the opportunity to take freedom in various capacities, they actually relinquish it. They actually don't take it. And there's many reasons, and we'd have to talk for hours to really delve into that. But I think at least Bitcoin is one of these things that's coming along and is not only providing an avenue for freedom and sovereignty, but it's also showing people the potential downfalls of not taking it, but also the responsibility required to take it. And once you understand that, from, like you were just saying, from the perspective of Bitcoin, you'll start looking at other things in your life through a similar lens, whether it's diet or whether it's medicine or whether it's governance or whether it's anything. And it kind of, yeah, it puts the Bitcoin lens over so many other things in your life of that context of freedom, responsibility, sovereignty, and the work required to take it.
Yeah, and it's exactly it. It requires work, and sovereignty, if done well, is the ultimate proof of work, right? In a way, it's again, a healthy body Well, if you want to be healthy, you gotta eat well and you gotta exercise. That again is another form of proof of work. So I think any and comfort, for instance, is the opposite. Like, watching, Netflix. And I don't have anything against Netflix. I think Netflix is great, but if you abuse it and you do that every day, then it just like, sure, it's comfortable, it's easy, and it's sort of but it's very passive. So you're not gonna gain much out of it over an extended period of time. And so I like the stoic movement that is shaping around Bitcoin as well. Uh, I think it's pretty healthy in a way, as you're getting today. We're getting an abundance of stuff, abundance of information, abundance of stimulation, abundance of people you can date with, abundance of food, abundance of shows, everything. And Bitcoin is actually sort of breaking that pattern and tells you that, or shows you that, no, you should, you know, basically lower your time preference, save, and think twice before spending, and be, look in the long term, invest in your future self instead of like consuming your present self. And that is extremely, um, it is an extremely interesting proposition in today's age, because you're now all of a sudden dealing with trying to artificially create scarcity in a world of abundance. And again, we've acknowledged that scarcity is valuable. So I think it's we're going in an interesting direction. I think. I hope that Bitcoin is a movement that will expand beyond the sort of Bitcoiner libertarian circles, and really trigger a movement of individual sovereignty. It's going to be really interesting what it does to social constructs in the next 20 years, 30 years. Uh, um, yeah, I think it's going to do a lot of good stuff for that.
Yeah, I agree. And there's so many interesting philosophical discussions that could be had around Bitcoin. But I know it's super late over there, and I know you want to get to bed. So, do you have time to do some of the rapid fire questions?
Yeah, for sure. So, what is that?
So, basically, I'll just ask you one question after the other. You can answer however long or short as you like. There's about 20 of them. So if you want to get to bed soon, then keep it short. And if you want to pass, you can say pass. And then we'll just finish off with some word associations at the end.
Okay, sure. Let's try it.
All right. So the first one is, what is money?
Money is time we store for the future, and a technology, an instrument that allows us to exchange it to other people.
If you had to explain Bitcoin to your grandmother or somebody over 80, what would you say?
Bitcoin is the native money of the internet.
What is the primary reason why Bitcoin is important or interesting to you?
Bitcoin unlocks individual sovereignty in a way that we've never experienced before, and allows individuals to take back control of their destiny in their lives. And that empowerment is, I believe, the next wave of societal shift for mankind.
Related to that, what does the quote unquote sovereign individual mean to you?
Sovereign individual is someone who is in control and takes accountability of their own decisions without delegating anything to anyone.
How long after you first heard of Bitcoin did you start learning more about it? And if you're comfortable saying, purchase it?
So I discovered Bitcoin in 2012. I purchased the first ones in 2014, sold it almost instantly, and didn't get back in before 2017. So it took me many years before caring about it and being enough, open-minded enough to actually read about it.
What movie or song is most related to Bitcoin in your opinion?
The Matrix.
Favorite movie, clip, or rant of all time?
Fight Club. Definitely a favorite. I have to rewatch it, by the way.
Can Bitcoin be stopped? If so, what is Bitcoin's biggest vulnerability? If not, why not?
Bitcoin is unstoppable by nature. Its properties and its decentralization make it like completely unbreakable. Um, though Bitcoin could fail if it's rendered completely useless. And to Saifedean's point, if we successfully go back to a gold standard, then yeah, maybe, Bitcoin would potentially fail. But I believe, if you look at the erosion of trust in institutions and the way central banks have sort of managed that gold standard in the past, I don't see that for happening. So going back to the first point, I believe Bitcoin now is unbreakable, and I'm saying now because in terms of just the cost to sustain an attack that would actually be fatal to the protocol, it's just completely uneconomical. Perhaps one last nuance I would add is if there is in any way a catastrophic bug in the protocol that we've never heard of, then yeah, definitely. Or a new technology that all of a sudden comes to the world, like quantum computing, that is again stable enough to deploy crazy amount of computing to break the encryption of Bitcoin. But I'm pretty confident that Bitcoin's anti-fragility will just allow us to modify the protocol to basically adjust to that new environmental threat.
When, if ever, do you think the first central bank will start adding Bitcoin to their reserves, and will they exist in 20 years?
I think a bunch of them are already doing it. They're just not saying it. Completely speculative opinion, but yeah. For instance, Bulgaria, they have, I think, 200,000 BTC right now. I'm pretty certain countries that have a lot to gain to go off the USD global reserve current configuration will be the ones that go about acquiring BTC first. And oftentimes these nations will also have great access to cheap electricity, which is a phenomenal way to acquire Bitcoin in a private way, which is by mining.
Yeah, man, 200,000 BTC could be quite the asset in the future for a smaller country.
Yeah. Bitcoin being the sort of the world's largest wealth transfer. It applies for individuals. It also applies for nations.
Yeah. Biggest mistake you've made with Bitcoin?
Trading shitcoins. Thinking I could return on that was BTC denominated. Thinking I could be a trader on the most highly volatile market we've seen recently, and just being greedy and arrogant. That was the mistake. But you know what? You learn, you get wrecked, and then you move on.
Totally.
And become a maximist.
Exactly. How do you feel about Satoshi Nakamoto, Bitcoin's creator, being anonymous and the coins that he likely controls?
I think Satoshi Nakamoto is the ultimate badass. He understood the risk of giving birth to Bitcoin and going towards fighting with the world's largest and most powerful cartel, which has monopolistic control over money production, central banks. So I think he was a genius to sort of be aware that things, if going well, could unfold in that way. So staying anonymous was the most, I think, the second most beautiful gift that he gave to the world. The first one being, the Genesis block and the running implementation of Bitcoin.
How have you changed, if at all, as a result of learning about or interacting with Bitcoin? The biggest change.
Oh, man. Biggest change. I would say lowering my time preference, even though it sounds cliche because a lot of Bitcoiners talk about this. it's been striking the way now any spending I do, I'm gonna think twice before doing it. So whether it's like going and having food outside, or even attending concerts and all that, I'm like, okay, like do I really want to do this? Is it really worth spending those precious satoshis today? Uh, and yeah, that is the biggest change, and I would say it's impacting also other um, areas of my life. For instance, nutrition being another one. I'm just like much more aware of uh, the choices I made in general, and I try to be much more like to understand things better, to go and actually do research about like why am I eating this, and when I'm tired of when I eat, carbs or pizza or pasta, like why is that? So trying to be more uh, skeptic in a bunch of different aspects of my life. Yeah.
I never thought about this before, but it might be why everyone's so active on Bitcoin Twitter, because we're all just hermits at home. Like we don't want to go out because, like don't want to go out and spend money. So we're all just at home on Twitter talking to each other. What is your most controversial or contrarian view or opinion? If none on Bitcoin, any subject is okay.
I think Bitcoin block size will change in the future. Whether it goes up or down, it'll change. That's a controversial view. It's a discussion we've had like over and over again in the community related to the ability of Bitcoin to generate a healthy fee market. And I believe the block size will play a role in the fee market in the future.
Ballpark estimate of Bitcoin's price in 5 years.
So 5 years. So 5 years, we're going to be at 2024. So we're going to be, okay, so we'll have two halvings, right? The 2020 halving and 2024. I would say Bitcoin will hit an all-time high of, roughly in the 3 to 5 mil, and it'll crash in 200K in that area. But again, who knows? Pure speculation. I'm actually piggybacking on the stock to flow model of Plan B. So I really hope that stock to flow model is gonna be somehow accurate, because I think a lot of people are basing their current allocation to Bitcoin based on that.
Do you have a morning routine? If so, what is it?
Yeah, I wake up, I take a big glass of water, and then I'm on Twitter for 30 minutes to an hour, and then I hit the gym, and then I talk to my parents on the phone, and then I go to work. Usually that's how I do it.
Nice. How do you define success?
Getting gradually better on a regular basis. So if I can like improve every day on something. For instance, I'm learning coding right now, so if I can just like do a little bit of it every day, great. And I think again, it's success is just like seeing how better I am tomorrow versus yesterday.
Most impactful book you've ever read?
It's gonna be cliche, but I would say the Bitcoin Standard is a big one for me. It really made me realize the impact of Bitcoin, and it made me want to commit to that mission for the next 20, 30 years of my life. So yeah, it was definitely an impactful book.
What is one piece of advice or an important action you can advise people to take today if they want to up their game in whatever area you think is important or an area of your expertise?
I would say keep an open mind and stay humble. Like sort of like another cliche I would say. Like I like all these memes we have in the community. They're so true and so real, man. Like Matt Odell and Marty are so good at shaping those, like the stay humble and stack sats. And so yeah, I would recommend people to not be greedy, and really be conservative in approaching this space if there are no corners. To not get scammed into beautiful narratives about financial independence that are actually targeting gullible retail investors. Yeah.
What is one question you'd like to see added to this list?
That's a tough one, man. What if Bitcoin fails? What are you going to be doing?
That's a good question. That's a very good question. All right, last part, word association. I say a word, you say whatever comes to your mind first.
Okay, let's do it.
Satoshi Nakamoto.
Genius.
Government.
Ugh.
Hash rate.
Peace of mind.
The individual.
Ownership.
Security.
Tranquility.
Ego.
0.
Greed.
Feed.
Stacking sats.
Every day.
Fiat currency.
Trash.
Guns.
Maybe.
Altcoins.
Nope.
Pizza.
Once a year.
Steak.
All day. Not a word, but.
Socialism.
Past.
Family.
Central.
Trump.
Orange.
Trudeau.
Nah.
Libra.
Stupid.
Gold.
Old.
And Bitcoin.
Freedom.
Awesome. That's it, man. I think it's time for me to let you get to bed. What time is it over there? 11:30 now. I'm sure you've had a super long day, but man, look, I appreciate you taking the time, and sorry for the mix-up on the start time, but this was super fun, man. I always enjoy these conversations, and particularly speaking with someone from Canada, because I don't get as many of those conversations. And of course, being Canadian myself, I'm curious about what's going on the scene and stuff there. Is there anywhere you wanted to direct people or anything like that?
I'm pretty active every day on Twitter. So if anybody wants to chat, Twitter is great. THIBM_. DM's always open. Yeah.
Awesome. That's a shortened version of your name, right? How should I introduce you when I do the intro for the pod?
Yeah, so usually, my first name is Thibaud.
Right.
Usually people call me Thib.
Thib.
Yeah, so that's why it's Thib on Twitter. It's just easier.
Cool.
Yeah, I'm having a hard time sort of like making that well pronounced with Anglos and international people. It's really a French name, so Thib is much more exportable, I would say.
Right. All right, man. Well, look, thanks again for taking the time. Really appreciate the conversation. And look forward to maybe speaking again in the future after some time has passed and both of us are a little bit wiser in the space. It'll be fun to chat again.
Definitely. Brilliant. Thank you, man. It was great.
All right, brother. Take care.
You too. Bye.
Bye-bye.